Hello, everyone. Welcome back to the RationalInvestor.com's Daily Brief Recap. As you could tell from yesterday's video, I got a little bit of religion here on these recap videos. I don't think there's any reason to rant for a half hour, 45 minutes here on a daily basis. So, obviously, we're in very chaotic times. Basically the entire video that I spent today, the daily brief, was pretty much just talking about how I don't really expect a heck of a lot of change in this market until the end of the month. I don't see any reason why the Dow can't trade back down to 22,000. I did see that the market was moving to lower lows here this morning. So it's we're caught in this. It is in my eyes now a panic across the globe. The one good thing that I did like to see this morning is we are finally starting to see a little bit of leadership out of these quote unquote leaders. What I find really sad these days is it seems that the banks and the bankers seem to have to be our leaders now. The politicians are incapable of leadership, which is very, very sad. But nonetheless, we did see some leadership coming out of the central bank out of England. Unfortunately, I don't think the market's really going to officially curtail until the Federal Reserve comes out and says, fine, helicopter money, QE5, whatever it takes, that kind of conversation. We are putting a bottom in this market. And as soon as that happens, then I think things will pivot. Well, as soon as we start hearing plunge protection team, that kind of stuff, that'll happen. But frankly speaking, I don't think it's in any of their, especially the stock market guys, I don't think it's in any of their interests to put a bottom in the market. They don't have anything to defend. Remember, they did their big FU up here, $7.5 billion on the SPY January leaps alone. And now the market's just in free fall. I don't think Wall Street really cares, which means that the U.S. Treasury Department really doesn't care, which is a little sad, but nonetheless, it is what it is. Obviously, and it's kind of interesting. It was like this reminds me kind of similar to like 9/11, where the stock market, 9/11 happened, of course, terrible tragedy. Stock market broke. But like 3 or 4 months later, when Greenspan was testifying in front of Congress, he would say things like, hopefully the stock market's performance here is nothing more than a footnote in the history books. And I get the feeling that hopefully is the way that this all plays out. I don't think it's economics that is driving the stock market down. It is fear. Sort of way, actually, it helps these governments because they save a lot of money not having to pay their employees. But at the same time, too, what I'm also seeing, too, is that there's a lot of fear in the marketplace about default. And how workers and companies and stuff are not going to be able to make bond payments. And I thought it was interesting, especially out of the oil industry here in Canada. I thought it was interesting that the government came up with an overnight $1 billion coronavirus emergency fund. So you can do these fundings if you have that sort of, flavor du jour headline. And the money, of course, is completely earmarked towards any institutions that are going to default on their mortgage or bond or loan payments, which I find fascinating, right? So in essence, this has been entirely just downloaded onto the Canadian government, the Canadian taxpayers, which, of course, I've told you repeatedly, Canadian taxpayer, I mean, it's just sort of adding insult to injury. There's nothing else that they can do. We just have to keep playing this game of money printing and diluting the currency. Bitcoin, $100,000. Woohoo! But the problem is it's going to take them to margin calls. You can't sell what you want to sell, so you sell what you can sell. And ironically enough, they're probably going to be doing some selling in crypto as well because they have to generate capital somewhere. Ironically enough, I would actually look at that as a buying opportunity in crypto. especially if you can buy below value. That's really the key to all this, in my opinion. So our little chart deck here, interesting how I've been looking at this Euro rally recently here as a good shorting window. I mean, frankly speaking, I'm a little shell-shocked right now. I think that the U.S. dollar here has gone in fractaled, of course, with the Bank of England cutting rates. British pound's looking pretty toppy. Euro now looks very toppy. I've been talking about wanting to short, but I'm just too chicken shit right now to do anything. But I can see a fractal now, this empire firing on U.S. dollar index, so I wouldn't be surprised if U.S. dollar index is all over the place here. And now, with the Fed cutting rates a week or two ago, now the Bank of England cutting rates, so now the propensity to buy U.S. dollars, play that spread is back in. So, and, does that even make any sense in Europe with negative interest rates? Not really. I think that was just maybe the U.S. dollar just got too overbought and had to clean itself out. Anyway, we'll see what happens. Definitely a bid back in U.S. dollars. As we have been saying recently, and I showed you that Dow tweet, I don't see any reason why the stock market can't work its way lower down into these AB equals CDs, and sometimes the market even overshoots them. So I'm not really calling for any bottoms anywhere in sight here. And I'm from Missouri, right? We'll see a bottom when the bottom comes in, when we see a W come in. And that's my attitude for the time being. Crude oil, interesting enough, EIA reports came out, showed a massive drawdown in unleaded and distillate products. I get the impression that the American public's going out and filling up the gas tank just before all hell breaks loose, just in case. But they showed a pretty big build in crude inventory, so kind of a mixed message there. And of course, I think the market is still very dominated by that quote-unquote price war between Russia and Saudi Arabia. I might argue, and I've seen some articles about this, that really it's not really about Russia and Saudi Arabia. It's more about the Americans are now net exporters of shale oil, and the real beneficiaries out of OPEC and Russia wrangling and stuff and trying to keep price up. Ironically enough, the Americans in the shale oil industry have been the biggest beneficiaries. So in a weird sort of way, I get the impression that they've sort of said, look, we got to work together to put these Americans out of business. What's their cost of production? All right, we got to take oil down below that. But anyway, that's tinfoil hats. Anyway, shake it. I'm not an oil bull. I don't even want to touch this stuff. And frankly speaking, I'm not a bull of much these days. I lost a lot of my bullish enthusiasm of the stock market with this failure here. It does make sense. We are, 11 years, people talked about this economic expansion being the longest in history. Well, now that's over. And the interesting thing is when we look back in history, we're going to blame beer flu for the recession. I think it's but the way I look at it, it's a lot of paper cuts, little haircuts here and there. I didn't have a hell of a lot of money in the market to begin with, and it's kind of like just dying 1,000 deaths on these little ones. But if they fail, I gotta walk away. We were actually musing in the daily brief about the wild gyrations in the bond market right now. If you look at the TLTs, they're just all over the place. I certainly don't have a trade. I mean, this is a fast market. A guy like me, I have to let everything settle down, start seeing W's and M's and stuff again. So I'm not really doing anything in all this. But I might make the argument that, Bank of England cutting rates, massive stimulus programs, Bank of England as well as I think the government there putting forth, expenditure programs. And these spending programs are to do nothing more than cover all the defaults that are going to happen. Probably the final shoe to this correction will be the Fed finally comes out and says, fine, you want money here, take all the money you want, printing press is back on, take rates down as low as possible, boom, we put a bottom in the market. I haven't heard that yet out of them, so that means there's probably still some more pain to go. But at the same time, too, how do you resolve this parabolic move? Like, I put out tweets recently saying, I've never seen this before in 30 years. This bond market went parabolic. And so now I think the process is now this thing's got to settle down a little bit here. So don't be surprised with all this stimulus talk and rates going zero and more probably quantitative easing. We're probably going to see the bond market finally settle down a little bit. And it's interesting, too, that we had just an absolutely awesome report yesterday by Raf and Bobo using chaos levels. And Bobo likes to use chaos levels of linear regression. And I like to follow the TIPS TLT spreads in his linear regression model. This was actually a perfect 4.466 linear regression model tag. So he's like, that's it. This move to the downside is done in this relationship. So I thought that was really cool. So I like the idea that, the central bankers really they haven't been like helicopter money kind of talk in a while. Actually, I think this crisis is going to get them back to helicopter money, diluting the currency. Bitcoin 100,000. Did I say that once before? Bitcoin 100,000. I'm telling you, it's feeling more and more in the cards. But at the same time too, they haven't come out with this stuff yet, and I think it takes the next couple weeks for that to happen. So it's not today. But I do like the idea, and like I said before, in the daily brief today, we looked at all the big boys, and good old Litecoin is trading now back below cost of production. I think they said the average cost of production in the industry is about $65. So he's now back below value. So if we can get levels, and we can get divergences, and we can get W's and RSIs and trendline breaks and W's and OBVs and stuff, well, I think the whole game starts all over again. The cool part, as you can see, I'm still looking for lower, and I get the feeling, and really I'm talking too much here. Let's maybe backtrack this here a little bit. So bonds, I do like the idea of the stimulus. Maybe that just calms things down here a little bit, and bond prices calm down, inflation starts to come back, yada, yada. Gold here, interesting, with the stock market collapsing and all that. Interesting to see how gold's having a really hard time gaining traction. Has that gold trade played itself out? I don't know, but if we do lose these lows, now they've got a bunch of trap bulls inside this little wick up top here. If we lose these lows, that's going to be an empire, so be careful on the gold. Individual stocks, I think I told you. I haven't been doing much lately, but I had to fucking blow out another one today that failed, so I bought this one against its low. As I've said to you repeatedly, I do like the idea of being someone who at least is a demonstrator of best practices. I said that I was going to buy against the lows. If it lost the lows, I had to walk away, and so I did. And it's painful, it sucks, it's brutal, but it is a trader's life. So I did come in on this hut and bought against the low here recently, against this gap. We'll see what happens. If we lose these lows and it can't hold this previous low, then I'll walk. You can see what the Galaxy did here. I like Novogratz. I think he's got a half decent head on his shoulders, but his stock hasn't bottomed yet. So took a shot, manned up, said I was wrong, got the hell out. Heading on over to crypto proper. As I've said repeatedly, not as said repeatedly. I was curious to see whether this head and shoulders here would hold, and really the jury's still out. We're very, very early in this, if this is a bottom, this bottoming process. Internals, sellers still very, very active. Is this sell what I can sell because I can sell it kind of market? I still think that, at $8,000, that's still very, very high relative to cost of production. I do like the idea, and what I've been telling sort of site people today is that a move back in, interesting how we zoom out on that. You can see that hole in the profile there. Even worse when I keep zooming out here. I do like the idea, and I've been sort of telling people on the site that if we go off of these old studies, and we used to do these videos repeatedly, I'd actually have cite people that are crypto experts, way more expert than I am in cryptology and all that. We did cost of production studies right here back in June 2019, and the consensus was about, you can see, $2,600. I do like the idea that if we dip down into $5,000-6,000 area, well, on the other side of this halving event, that's going to be the same price. So, if you get a window here where it dips down into 5,000-6,000, and you can buy technically after the middle of May, you bought below cost of production. So I really don't mind that. What I'm fearful of here, of course, over the short term is as we head into the end of the month here, and as really nobody is supporting the broader market. I hear central bankers over in Europe are trying to do something, but I haven't heard anything out of the Fed. We won't know this thing's bottomed until the Fed actually steps in and says enough is enough. So, you look at Bitcoin here, we're threatening to press against those lows that we saw there the other day. We really won't know this thing has quote-unquote bottomed until we start seeing W's. You see how long this head and shoulders took to develop. That was, what is that? That's almost like two and a half months. It might take that long for this thing to turn. You just don't know in this game. I do like to even try and hunt for like short-term 3-candle patterns, fractals, to sort of tell me that, okay, fine, the selling stopped, but we don't even have that. We had this down bar yesterday, or 2 days ago, down bar yesterday, and we just went and lost yesterday's lows here this morning. And of course, if we change this to a line chart, nothing changes, right? It's lower lows. So there is no bottom here. And for the sort of traders on the site, I don't know whether I really like short trades on Bitcoin or Litecoin, especially Litecoin so close to its bottom. But I did notice on Ethereum there was a cute little sort of intraday bot that's set up here. So traders got a trade. You can see 196.65 was this level over here on Phoenix, and whatever your exchange is that you trade, trade appropriately those levels. You could make the argument, nice little fast trendline break, structure on the other side. There's the bot level. So botters coming up on move stop to scratch, and of course move stop to trailing, and their ultimate objective here is about 165 and change. Sellers are still in control. Momentum, beautiful momentum divergence. Confirmed divergence. Please understand, you have to learn what a confirmed divergence looks like. And also a really nice rolling over of the RSI study, breaking up trend lines, establishing new downtrend lines, etc. So I did like this short setup here. It's quite pretty. So there's sort of your higher time frame, bigger crypto story. But the irony of it all is that there's some fun stories in crypto right now. When it comes to the bigger guys, these leverage products, there was a cute little fractal, and of course, if you're a trader, you probably started to get antsy through this, or maybe you just hopped at scratch, kind of idea when we crapped out there the other day. The fact that we're pressing here these lows, I'd sort of said, I think in yesterday's video, I had said maybe a potential fractal. You can see how that's a brick wall here in the short term, eh? So if the market had it, yeah, look at that. That's interesting. So this is obviously now a key level right there. If the market had accepted above there, then that would have been a buy signal. You can see they opened it up, took it up, and said, nope, down you go. So no bottom here. There's nothing really to do there just yet. And remember my mana. I'm still bidding down here. So maybe now I'm going to finally get my fills when, Ethereum finishes its move, Litecoin, Bitcoin head into their downside objectives. Maybe I can get my fill here on mana. That'd be nice. The cool part about mana is I'm buying it because I want to go and buy some land in Decentraland. So I like cryptos that actually have direct application. That to me really speaks loudly. And again, if you can buy crypto at or below the cost of production, you're buying value. That's good. These stock markets, I don't even know what value is in the S&P 500 right now. Relatively speaking, I actually think that buying crypto at or below cost of production is actually a less risky bet than buying even blue chip stocks here. So go figure. The little pieces of poo, be careful. Trade setups. Don't be stupid, right? And if you are going to buy, just average your way in at the bottom ends of ranges, nanny nibbles, have your orders sell halves on doubles, blah, 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 that kind of stuff. None of our sort of responsible trading, responsible thinking ends with this kind of market. Um, and what I thought was so cool today was, I wake up and I open up TRI Lounge, and there's a whole bunch of guys talking about banging out doubles this morning. I'm like, what the fuck? You guys are crazy. So big hats off to Benjamin. And Adam Cave Bear, wherever you are in the world, if you are going to watch this, if anybody is talking to him, this was originally one of his ideas. And Benjamin and a bunch of other TRIers, Alim, I think, was on there as well. They were all, woohoo, banging out doubles. So it just goes to show that there's always a bull somewhere. So if anything, that's probably a great note to leave this video off on. All right, everybody, hang in there. Build your trading plan. Make sure you have a nice big pile of cash, powder dry. You've probably heard that expression before. I really, if you are in a buying kind of mood and you do have some powder dry, keep your eyes open for the end of this month. The next couple weeks, I think, are going to just be a mess in the stock market. There's no hurry whatsoever. I think that, unfortunately, the stock market malaise is going to carry over to crypto. And like I said just a moment ago, if you can take advantage of these pullbacks in crypto and buy at or below cost of production on your idea, I think it's an excellent, excellent idea. So that's what I'll be doing with my money. Dollar cost averaging into the corn. We trying to buy some mana so we can go buy some Decentraland real estate. Like direct application of use of these cryptos. Right? Okay, everybody, have yourselves a great day. PMA for the win. Hang in there, everybody. All the best, and bye for now.